Interest rates have been super low now for more than a decade, and if you've got money in the bank, it can be really frustrating to be earning so little interest. That's why it's easy to be tempted by adverts offering really high interest rates. But as the recent collapse of London capital and finance shows, those promises can be empty. Welcome to another 5-Minute Friday. Thank you so much for joining me. So great to see you all. I think it's important to address events like the collapse of London capital and finance so that we can learn lessons when things go really badly wrong. So let's talk about this today and put 5 minutes on the clock down here. Say a quick thank you to my good friends at 7 Investment Management for continuing to sponsor Meaningful Money, and let's crack on. You know, there were so many things wrong with the promises made by London Capital and Finance, henceforth to be named LC&F for the duration of this video. So much wrong there, but it's easy to be wise in hindsight, and it's important that there's no judgment here. Anybody can be caught out. So I want to take a few points from this whole mess and draw some lessons from it so that we can be wise and protected, hopefully so that there isn't a next time. So the first point is that LC&F were offering an investment that was unregulated. Now, it was hard to tell that because LC&F themselves were a regulated company. But they were regulated for some other stuff, not for selling these bonds and ISAs that they were advertising. So that's confusing, right? The products that were being sold were not regulated. LC&F themselves were regulated, but not for the sort of stuff that they were doing here. I mean, how is an ordinary person supposed to make sense of all of that? Yes, the FAQ page on the LC&F website did say quite clearly that the bonds that they were selling were unregulated investments. Now, unregulated, crucially, means that those investments were not covered by the FSCS. That's the Financial Services Compensation Scheme, which is a government-backed scheme that steps in when a provider of investments and deposits goes under. So the really important lesson here, the FCA, that's the Financial Conduct Authority, the ultimate authority regulating financial services in the UK, they do not regulate products. They regulate providers and distributors of products. It's a really important distinction. So if security is of concern to you, you need to make sure that whatever you're investing is covered by the FSCS, the Financial Services Compensation Scheme. Looking back at some of the adverts that LC&F were putting on Facebook, they used the phrase full asset-backed security. Now that sounds great, doesn't it? But it's a meaningless marketing phrase. The website did say that investors' money was loaned out to companies and that if those companies failed, then investors could take anything up to a complete loss of their money. So it's hard to square that. Full asset-backed security, in inverted commas, that was on the marketing stuff, but in the terms and conditions, that clearly wasn't the case. What's the lesson there? Well, we need to read past marketing claptrap. We need to look into the details and understand what we're considering investing in. We need to dig deep, but ultimately, if you don't understand what you're thinking about investing in, don't invest. Investing really doesn't need to be difficult and complex. That's the whole reason for the existence of Meaningful Money and other websites like it. It doesn't need to be complicated. Anybody can understand this stuff. And if you don't, when you read the small print, don't invest, for goodness sake. Another phrase that was on the adverts that LC&F were putting on Facebook and elsewhere was no setup costs, no management fees, and no charges. That's a direct quote. I mean, how does that work? LC&F, what were they, a charity? Well, of course not. So how can that possibly make sense? There really, literally is no such thing as a free lunch. So if something purports to be free, to have no charges of any kind, you know that actually there are charges, but they are being hidden. Now that cannot happen with products issued by fully regulated companies. Mainstream investments like funds and investment bonds and ISAs and all that sort of stuff, that can't happen. All fees must be fully disclosed in pounds and pence terms before you invest. So there's a clear difference between that and this smoke and mirrors approach that was being employed by LC&F. So what's the lesson here? Nothing costs nothing. Anything that says it costs nothing is a lie. The final bit of marketing that was on the material from LC&F was promises of 8% annual interest if you locked your money away for 3 years. 8%! A year ago when that advert was running, you could get 2, maybe 2.5% if you were lucky, by locking up your money with a traditional bank or building society. Even then, it would need to be an internet-only account, and yes, you would need to lock it up, probably with no opportunity for withdrawals within the term. But LC&F were offering 3, nearly 4 times the going rate at the time. We need to understand that whenever there is an elevated rate of return promised, there must be a corresponding elevated level of risk. The link between risk and reward is long established. It's eternal even. It's part of the way the universe works, which means that something with a high return but which promises next to no risk is a complete nonsense. The key lesson here is, if it sounds too good to be true, it almost certainly is. So a few lessons from this whole mess. If you're worried about security at all, make sure whatever you're investing is covered by the Financial Services Compensation Scheme. Next, before investing, make sure you understand what you're investing into. Understand the costs, the accessibility, the flexibility of the contract you're buying. Next, nothing costs nothing. There are always charges involved, and anything that suggests that there isn't is lying to you. You need to understand what the costs are before you start putting your money into it. And then finally, the overarching truth that if it sounds too good to be true, it almost certainly is. 4 valuable lessons that I hope you can take from this and make sure that you're never caught by one of these things. Now, it has to be said, there were some clear failings by the regulator in this regard. LC&F were brought to the regulator's attention in 2015, 4 years before they finally went bust, taking something like £260 million of investors' money with them. We have a highly regulated financial services system here in the UK, and that's a good thing, but it isn't perfect. There are still companies out there looking to prey on unsuspecting investors. There will always be people looking to part you from your money, so caveat emptor, buyer beware. Understand the lessons from this particular event and make sure that this stuff never happens to you. Okay, hope that was useful. Thank you so much for watching. Have a great weekend, and I'll see you in next week's 5 Minute Friday.